Good day, and welcome to the ADM Agriculture YouTube channel. My name is Nico Papworth. I'm the Retail Fertiliser Trading Manager for ADM in the UK. Let's dive straight into the market report. Markets over the last 2 weeks have been dominated by macroeconomic news. Geopolitical tensions have caused substantial movement in the nitrogen markets, in particular urea. And we have seen a fairly steamy week for the US dollar, which has rebounded from lows, further compounding some of the challenges which we'll touch on in today's report. But let's open things up with natural gas. At the end of last week, futures rose in excess of £1 a therm, mainly due to the ongoing geopolitical tensions. Today, the outlook appears to improve slightly with imports looking stronger, greater domestic generation, and high gas storage levels in Europe. Geopolitical tensions remain a threat to the market alongside revisions to Norwegian gas maintenance schedules. In the past weeks, Israel did briefly halt gas production at both Tamar and Leviathan fields, which have since resumed. A long-term shutdown would mark a tightening of around 1.7% on global supply. In the urea markets, physical markets out of Egypt into Europe are now traded as high as $407 per tonne on Monday, up around 13% on week commencing 23rd of September. Globally, buyers' concerns remain directed at Iranian urea, which represents around 25% of the Middle East urea exports. The Indian RCF tender, placed last Thursday at 2.57 million tonnes for shipment movement mid-November, was one of the first to add some physicality to a market which has seen the majority happen in the paper markets. RCF has asked for counter-offers to all of its offers made to the East Coast region and is looking highly unlikely they'll be able to secure enough volume without requiring a further tender deeper into Q4. In Brazil, sellers are trying to raise granular urea prices in the region of $395 to $400. However, buyers are not willing to take a leap of faith quite at this stage. In the UK, while some offers on a POA basis remain present, all major urea suppliers have withdrawn from the market and are currently considering a level to re-enter following large jumps in CIF urea prices to the UK. This has been further compounded by a strengthening US dollar, as I mentioned earlier. In the ammonia markets, in the last 2 weeks, ammonia has been facing significant supply risk. Prices west of Suez, in particular European markets, being fueled by limited October supply, to such an extent that traders were weighing up opportunities to utilize other sources in the Middle East and the US to try and take advantage of these much higher prices. However, whilst these risks are still very much present and some European production remains curtailed to around 70 to 80%, some alleviations in the gas price will certainly have an effect and limit upside risk at this stage. Today, CF have withdrawn their Nitram offer in the UK, which has brought some buyers to the market during the beginning of the week. Just to briefly touch on nitrogen a little bit further before we move on, UK withdrawals have happened across the board. If this is to stay in tune with the French market and comply with what we're seeing on the global market, we would expect to see around £10 to £30 price hikes across the board, depending on global levels at that moment. I feel in the nitrogen markets, the growers should at least be considering some security of supply heading into the spring. Primarily, I'm looking at this from a break-even ratio perspective, and I think that spins a small positive. We'd be looking at break-even ratios for AN and urea sitting at 4.8 and 4.1 respectively, when taking an average of AN and urea prices currently available in the UK spot market. I feel this adds a small positive to the current commodity market volatility. Potash. Markets remain stagnant, with global demand remaining limited. Prices remain weak as subdued demand persists. There is an expectation that appetite will return on the back of weakening prices, assuming the current market sentiment remains the same. Traders do have an eye on the ongoing geopolitical tensions. However, any concerns are unlikely to be shown in the market at this stage. Once market participants return later in the fourth quarter, this is likely to only reduce any downwards pressure. Without any disruption to Middle Eastern supply, I expect this to be the outlook moving forward. In the phosphate market, prices remain unchanged. Golden Week in China limited the market in the east, and the prevailing Middle Eastern conflicts had very little effect on price point. China has remained firm in its position not to fully surplus Indian DAP demands, and will keep Eastern prices firm for the moment. In Europe, suppliers have kept prices steady despite limited liquidity entering the physical market. Most growers are covered for P&K in the autumn at this stage, and they'll be considering their requirements for spring imminently. Thank you for listening and have a great week's trading.